Hey everyone, it's Matt Donahue with Mission Financial Planners. Merry Christmas, Happy New Year's, Happy Kwanzaa, Happy Hanukkah, Happy whatever you celebrate. I hope that you are having a great holiday season. The clock's ticking, we're running out of time, but hopefully you're ready or close to being ready for the holidays. Let's jump into it. So, our market recap this week. Well, we're going to talk a little bit about bond markets this week. Bond market volatility continues to challenge investors. The Fed, as we all know, began its easing cycle in September, which was a little later than expected, but now there's concerns that the Fed's going to wrap it up a little sooner than expected. Last week's inflation report was very closely watched. Headline inflation rose slightly to 2.7% year over year, while core inflation stayed at 3.3%. For the third month in a row. But the underlying data is a bit more positive. Core goods are still in a deflationary trend, and rents, which is a big driver of core services, they've slowed to their weakest pace in over 3 years. So this does suggest more cooling is on the way. Looking ahead, tariffs, if implemented, could disrupt the progress and reignite goods inflation, but that's an uncertainty, right? So as long as we have uncertainty, the bond market volatility will persist. Big events coming up this week. Hey, the Fed on Wednesday has their interest rate decision. Some other highlights: U.S. retail sales, housing starts, Q3 GDP, and core inflation is going to come out as well. Tax tips. For those of you who are a little older, we're going to talk today about required minimum distributions. As we approach year end, we got to focus on that. We got to make sure we get those done because you want to avoid the penalties, which I'll touch on in just a moment. But at age 73, you've got to start taking money from your accounts like your IRAs and your 401ks. You can delay until April 1 of the following year, but just remember that means you end up taking two distributions during the same calendar year. That could really mess up your taxes. It could mess up your Medicare premiums as well. Tips to remember: RMD calculations are based on your year-end account value as of the previous year. If you don't take your RMDs, you've got a 25% excise tax you've got to pay. That can be reduced down to 10% if you take care of it in a timely fashion. So you're paying a penalty if you don't do those RMDs on time. Want to save taxes on it? Maybe you don't need the RMD. Consider using the RMD to fund life insurance as a legacy gift to charities or maybe family and friends. Or alternatively, just give the money to a charity. If you do it through a qualified charitable distribution, you can avoid taxes completely on that. A couple exceptions for early withdrawals. Check out our blog site or our blog to get those. And then finally, last chance planning checklist. Here we go. This week we're going to talk about milestones and health. Couple big milestones. If you're in your 50s, take advantage of all the catch-up provisions in things like qualified retirement plans at work and in IRAs. Start focusing on your health. Mammograms, colonoscopies, vaccines like shingles, hepatitis. I am overdue for my shingles, but I did my very first colonoscopy last year. So make sure you start taking that stuff seriously. 59 and a half, you can start pulling money out of those retirement accounts without penalty. Hey, that's great, right? And then in your 60s, you want to have some pretty hefty savings in place to make sure you can maintain your lifestyle in retirement. You've got Social Security, you've got Medicare decisions. But in terms of health as well, you want to talk about things like RSV and other vaccines that you might want to consider getting through your doctor. Philosophy. Quote of the week. It's amazing how this stuff ties together. Everlasting good health. This is from Epictetus. And basically the quote is: the only confidence worth holding is in what is trustworthy, unhindered, and can't be taken away, which is your own reasoned choice. What he's saying is you make decisions based on what your mindset is and the choices that are available to you at the time you have to make those decisions. And a lot of you who know me really well know that I believe that almost everybody tries to make the best decision they can given where they're at in life and given what they know at that moment in time. Keep that in mind. Keep that in perspective. Not only does it help you make good decisions, but it also helps you sleep at night, because we've all been in situations where we've had to make a tough decision and then we worry about it afterwards. Did we do the right thing? So keep that in mind, right? Keep that in mind, is make the best decision you can with the information you have at hand. And from a, just kind of a wrap up on this, watch the Fed's decisions. Have a great holiday season. Don't forget about your RMDs. And remember as well, health and wealth go hand in hand. So make good decisions. And I will see you all for a brief update next week. But otherwise, have a great holiday season, everyone. Enjoy the rest of 24. Hey, we've only got 14 more days left in the year. Enjoy it. It'll be gone forever. And then we get to look forward to 2025. Thanks again, everyone. Have a great week. Merry Christmas. Happy Hanukkah. Happy Kwanzaa. Whatever you celebrate. Merry Christmas. Enjoy it. Have a great holiday season. Thanks, everyone. Bye-bye.